Should we worry about the value of the dollar? I mean, talk a little bit about the global landscape because, I mean, we've always focused on the domestic market, but yet there is a sense that the dollar is vulnerable having been so strong.
The dollar was raging. It had jumped out to like 35-year highs against there was no euro 35 years ago, but the Deutschmark and the franc and the things like that.
The British pound.
British
back when
pound.
a lettuce was competing against
Thank
the
you,
Prime
Liz
Minister.
Truss. Yeah, that was parity almost, right? In the GBP to the USD. So here's what I view currency as. J.P. Morgan was asked by a young investor after the 1907 panic, what will happen to the stock market? Young man, it will fluctuate. So exchange rates will fluctuate. You look at the history of the dollar, it goes up, it goes down versus currencies. And here's the strange thing. You think, I want a strong U.S. dollar because I have U.S. dollars. Yeah, that's cool if you're going to France and you want to buy wine at the wine tours and things like that.
Not if you want to buy French wine here.
Or if you're trying to sell plows and bulldozers and things like that to Europe. Because when the dollar is strong, it hurts U.S. exporters. So the weaker the better if you're a company like Caterpillar or Cummins or anybody who exports to the rest, Boeing, exports to the rest of the world. So the dollar and currency translations are a long-term wash, and I don't think you should really waste your brain power trying to worry about what's going to happen in the short term.
One of the perils, and I will admit myself to being in this category, partly because as a journalist I don't buy individual stocks, but people are sitting on a lot of cash.
Yeah.
And is that a mistake?
Well, it's a mistake if the market goes to the moon from here. But if we're, look, no one knows what's going to happen next year. The uniform consensus is for a recession. But you've been around I've been around.
I've seen a recession.
And you've seen magazine. Remember okay, I was in 5th grade, but 1979, The Death of Equities, read the cover of Newsweek magazine. And little did you know, we were just 2-3 years away from the next major bull market. So right when you think that, right when the sentiment suggests that we're going to go one way, history shows that we tend to go the other way. So we don't know if there's going to be a recession next year. It looks like we may have already been through the worst of it. I mean, GDP shrunk in the second quarter and grew in the third quarter. So maybe we were in it and out of it and didn't even know it.
I know obviously caveat emptor is always the message to any investor. But to sum up, in terms of going into 2023 and the investment outlook, are you generally optimistic, or are you perhaps, treading in with a little more fear than usual?
I look at this environment as one where you can find abundant value everywhere you look. And I'm not saying that things won't get worse before they get better. If you look at the period that is an analogy for this one, the Volcker tightening period from 1979 to 82, we didn't really, the stock market went nowhere. It did one of these. We came back almost to where we started in 79, and then it was the great takeoff. So I'm optimistic. I see a lot of value. When I feel fear my own self, I know that that's a trigger. That's an indication that maybe there's some good buys out there. Because it's hard not to get wrapped up in the pessimism. And when pessimism gets to a contrarian style to investing, is a very smart way to go.